All right, listeners, welcome back to Talk Takers.
Back again.
Today we're going deep
Yeet.
into Sotera Health's Q3 2024 earnings call.
That's right.
They're a big name in healthcare, doing all that behind-the-scenes sterilization and lab testing that, frankly, most people never think about.
Yeah, it's not exactly dinner table conversation.
Right,
But
super important.
But it's mission-critical stuff.
It is, absolutely.
You know, you don't want to be going into surgery thinking, I wonder if they sterilized this scalpel properly.
Exactly. Sotera Health is kind of the unsung hero, making sure medical devices, pharmaceuticals, all that stuff is safe for patients.
All over the world, yeah.
So they had their Q3 earnings call on November 5th, and we are here to break it all down.
That's right.
We've got the transcript fresh off the press, plus we pulled some financial data and stock info from SoteraHealth.com and Yahoo Finance.
You know, got to get the full picture.
Yeah, to get the full picture, exactly.
Multiplying.
So we'll be digging into whether Sotera met, beat, or missed earnings expectations. What's driving Nordion's litigation? Their revenue just exploded this quarter.
Oh, yeah.
And how they're handling those new ethylene oxide sterilization regulations. That's a big one.
Huge implications, Yeah. not just for Sotera Health, but for the whole healthcare industry.
Absolutely. So let's jump right in.
Let's do it.
Top level numbers first. So the Sotera Health saw year-over-year growth for both revenue and adjusted EBITDA, which is a key profitability metric.
Right. So they're not just growing, but they're growing efficiently.
Exactly. Their revenue jumped 8.5%, reaching $285 million for the quarter, and adjusted EBITDA climbed 9% to $146 million.
Now, when we talk about adjusted EBITDA,
Yeah.
think of it as a way to see how the company's core operations are performing. It
Yeah.
strips away things like interest, taxes, depreciation, and amortization, all that stuff.
So it's really getting down to the nitty-gritty.
Yeah, the real meat of it.
Yeah.
How much cash are they actually generating from their main business?
Okay, so adjusted earnings per share, that came in at 17 cents.
Up just a penny from last year.
Not a huge jump, but still.
But it's still an increase, which shows they're turning that revenue growth into actual profit.
And that's what investors want to see, right?
Absolutely. That's what keeps them happy.
All right, let's break it down by segment, starting with their biggest one, Sterigenics.
Sterigenics, yeah, they're the heart of their sterilization operations.
They're using technologies like ethylene oxide and gamma radiation.
Right, a lot of different tools in the toolbox.
And they saw a solid 4.3% revenue increase, hitting $176 million for the quarter.
Not bad at all.
Not bad. They attributed this to good pricing power.
So they're able to charge a bit more.
Yeah, and a slight uptick in volume and mix.
Meaning they sold more and maybe at better prices.
Exactly. And considering all the supply chain issues,
Right.
inflation, we're seeing a slowdown in elective procedures,
Yeah.
a lot of pressure on the healthcare industry, right?
Sure.
For Sterigenics to hold steady at 4.3%, that suggests they're navigating all those obstacles pretty well.
Yeah, they seem to be holding their own.
And they even mentioned hearing less talk about clients reducing inventory. So maybe the worst of that destocking phase is behind them.
Fingers crossed.
Fingers crossed, we'll have to see how the next few quarters play out.
Exactly. Gotta stay tuned.
All right, now on to Nordion, the other big player in Sotera Health's sterilization game.
These guys had a phenomenal quarter.
Phenomenal's right.
Their revenue just went through the roof.
It did.
A massive 28% jump to $51 million.
Yeah, we're talking explosive growth here.
That really tells you how crucial their gamma radiation sterilization services are. And the demand for radioisotopes, those radioactive elements used in medical treatments, is just skyrocketing.
Hold on, 28%.
Yeah.
That's not just growth, that's like a rocket ship.
Right.
What's fueling that kind of surge?
Well, a big chunk of that comes from the timing of their cobalt-60 harvest. Nordion produces cobalt-60, which is vital for sterilization and cancer treatments.
Right.
They moved some shipments that were originally planned for the fourth quarter forward to meet that insane customer demand.
So it's partly a timing thing.
Partly.
But still, being able to ramp up production and deliver like that, that's impressive.
It really shows they're agile.
Yeah, it's like a well-oiled machine suddenly kicking into overdrive.
And it really highlights that booming demand for gamma sterilization, especially for medical devices and pharmaceuticals.
Makes you wonder how they're going to keep up with that demand long term.
Well, that's where their big announcement about the Darlington reactor in Canada comes in.
Right, they're expecting their first batch of cobalt-60 from there to be harvested in 2028.
That's going to give Nordion's production capacity another massive boost.
Huge.
Yeah. It's a strategic move to ensure they have a steady supply of cobalt-60 down the line.
Not just for themselves.
Right, for all their clients who depend on it.
Smart move.
Very smart.
Now, last but not least, we have Nelson Labs, their lab testing and advisory service.
The brains of the operation.
They had a decent quarter, too. Revenues up 7% to $59 million.
Nelson Labs is a bit different from the sterilization side.
How so?
They're all about ensuring the safety and effectiveness of medical devices and pharmaceuticals through testing and expert advice.
Okay, so more of a consulting role.
Exactly.
And they mentioned higher volumes for their core lab testing services.
Yeah, so there's a consistent need for their expertise.
Which makes sense. As the healthcare industry keeps evolving, they need experts to make sure everything's up to snuff.
Absolutely, and it's impressive that they're managing to improve their margins even with labor costs going up.
How are they doing that?
They said labor productivity was a key factor.
So they're getting more output from their workforce.
Exactly, working smarter, not harder.
They did, however, caution that their high-margin expert advisory services are starting to normalize after a period of strong growth.
Remember we talked about how they were brought in to help companies facing scrutiny from regulators and compliance issues?
Right.
Seems like that wave of activity is settling down.
Which makes sense. Consulting work can be unpredictable.
Definitely.
But even with this normalization, Nelson Labs is still projected to hit impressive margins of around 30% for the full year.
That's a healthy number.
All right, so zooming out to the company as a whole.
Big picture time.
So Sotera Health reaffirmed their full year 2024 outlook for both revenue and adjusted EBITDA growth, aiming for a range of 4 to 6%.
A solid growth.
And they expect their adjusted EBITDA margins to approach 50%.
That's impressive, especially considering the economic headwinds out there.
Yeah, it's like they're not just surviving, they're thriving.
Exactly. They're managing costs effectively, strategically expanding their capacity, and capitalizing on the growing demand for their services.
And they're not afraid to invest in their future.
Right. Capital expenditures are projected to be between $175 million and $185 million for the year.
With a big chunk of that going to those cobalt development projects and capacity expansions we talked about.
It really makes you wonder, will these investments pay off in the long run?
Well, to answer that question, they're actually hosting their first ever Investor Day in New York City on November 20th.
Mark your calendars, folks.
It'll be a chance to hear directly from their leadership team about their vision for the future and how they plan to tackle challenges like evolving regulations and increased competition.
Should be interesting.
Now, before we jump into our This Is Not Financial Advice segment, what stood out to you from this earnings call?
I think their resilience, their ability to deliver consistent growth despite all these headwinds, that's what impressed me the most.
Yeah, that's a good point.
They're making strategic investments. They're committed to innovation. It seems like they're in a really good position for future growth.
Agreed. Although that regulatory landscape, especially around ethylene oxide sterilization, that's still a big question mark.
Absolutely. That's something to keep a close eye on.
For sure, Nordion's performance was another highlight for me.
Oh, yeah.
Their strong revenue growth and those ambitious expansion plans, it really shows how important gamma radiation sterilization is becoming in healthcare.
Definitely a key takeaway.
All right, it's time for the fun part.
Let's do it.
Our This Is Not Financial Advice segment. Remember, this is all hypothetical.
Purely for entertainment purposes.
We're just having some fun here, so based on what we've learned, what's a bold but plausible trade idea we could cook up?
Well, Sotera Health's clearly betting big on gamma radiation sterilization.
Right.
And with all that cobalt-60 production coming online, they could become the dominant player in that market.
Yeah, it's possible.
So what if we look at options contracts expiring after that Darlington reactor comes online in 2028?
Interesting. So we're basically betting on the long-term success of their gamma sterilization business.
Exactly. We're riding the gamma radiation wave.
But now for a different flavor, remember all that uncertainty around the ethylene oxide regulations.
Oh, yeah. That's a wild card.
Could we play both sides of that?
We could buy puts on a company that's heavily reliant on ethylene oxide sterilization, betting they'll struggle with the new rules.
Okay, I see where you're going with this.
And at the same time, we buy calls on Sotera, betting they'll navigate those regulations smoothly and maybe even grab market share from their competitors who are struggling.
So we're hedging our bets.
Exactly. We're playing the regulatory uncertainty.
Pretty clever. But remember, everyone, this is pure speculation.
Don't try this at home.
Do your own research, talk to a financial advisor, all that good stuff.
Absolutely. This is just us brainstorming.
And to be crystal clear, this is not financial advice.
Nope, not at all.
Okay, great points. And that wraps up part one of our deep dive into Sotera Health's Q3 2024 earnings call.
Stay tuned for part 2.
We'll be back to dissect the finer details and uncover even more insights.
See you then.
One thing that really stood out to me was how Sotera talked about helping companies navigate those increasingly complex regulations.
Yeah, it's a jungle out there.
It is. Imagine you're a company, you've got this amazing new medical device ready to launch.
Game changer.
But you don't just have to prove it works.
Yeah.
You've got to prove it's safe, meets all these regulations.
Right, it's a whole other ball game.
That's where Sotera comes in.
They're like the Sherpas, guiding you through that regulatory mountain range.
I like that analogy.
They even gave this example about working with companies making those continuous glucose monitors, the ones that are revolutionizing diabetes care.
Oh yeah, those are amazing.
They're helping them make sure they comply with all the latest safety and regulatory standards.
It's a great example of how Sotera is more than just a vendor. They're a partner,
Right, they're invested in your success.
helping companies bring these life-changing products to market.
And with all the innovation happening in medical technology these days.
New battery design, cybersecurity, all that.
It's amazing, but it also creates new regulatory challenges.
Like a constant game of catch-up.
Exactly. And Sotera's positioning themselves as the experts who can help you stay ahead of the curve.
Okay, let's talk numbers.
Hit me with them.
Their balance sheet, their financial snapshot, if you will, looks solid.
Yeah, they've got a strong foundation.
Over $700 million in available liquidity.
Think of that as their financial cushion.
Right, their safety net.
It includes $307 million in cash and a $400 million undrawn credit facility.
Like a backup credit card.
Exactly, just in case they need it.
Having that flexibility is so important, especially in this economy.
Absolutely, it gives them room to breathe, keep investing in growth.
And weather any storms that might come their way.
Right, you never know what's around the corner.
They also mentioned their net leverage ratio improved to 3.6 times during the quarter.
Now, I know what you're thinking. What in the world does that mean?
Right. It sounds complicated.
It's actually pretty simple. It's basically a measure of how much debt a company has compared to its earnings.
Okay, so a lower ratio is better.
Generally, yeah, it means they're managing their debt well.
So Sotera's ratio is well within their target range of 2 to 4 times.
Which suggests they're being responsible, like keeping your credit card balance in check.
I can get behind that.
Now, back to the earnings call itself.
Let's dive back in.
The analysts had some interesting questions.
Oh yeah, they always do.
One thing that kept coming up was the volume recovery in their sterilization business, especially for Sterigenics.
Right, they want to know if those supply chain issues and the slowdown in elective procedures are easing up.
Remember we talked about that.
It sounds like things are moving in the right direction.
Cautiously optimistic.
Sotera mentioned they're not hearing as much about clients reducing their inventory.
So that destocking trend might be easing.
And volumes seem to be stabilizing.
But it's not a full-blown recovery yet.
More like a glimmer of hope.
Yeah, we'll have to wait and see what happens next quarter.
The analysts were also curious about pricing trends at Sterigenics.
They noticed that pricing growth had slowed down a bit.
Which is interesting because in this environment, with costs rising everywhere, you'd think companies would be raising prices.
Right, analysts are always laser-focused on pricing.
They wanted to know if Sotera could still flex its pricing muscles.
Well, Sotera assured them they're not worried about pricing.
Confident. I like it.
They emphasized their strong value proposition and their ability to maintain margins.
So they're basically saying, we're worth it.
Exactly. And they clarified that their pricing power is strong enough to offset those rising labor costs, which is good news.
Another interesting point was the potential impact of reduced spending on pharmaceutical research and development. R&D for short.
Right, and tighter funding for biotech companies.
That's a challenge a lot of companies in the healthcare space are facing right now.
It's a valid concern, but Sotera seemed confident they could handle it.
They highlighted their strong relationships with those pharma and biotech companies.
And the fact that their services are absolutely essential.
They specifically called out their expertise in pharma testing and sterilization as key differentiators.
And remember those expert advisory services we talked about?
Like the consulting side.
That could actually benefit from all the increased scrutiny and regulatory complexity in the pharma space.
So it's like a silver lining for them.
Every cloud has a silver lining, right?
Now let's talk about the elephant in the room.
Uh-oh, what's that?
The ethylene oxide modernization program and those new regulations around emissions.
That's been a hot topic.
A bit of a controversy.
Analysts were eager to get updates on the program's progress and the potential financial impact.
So what does Sotera have to say?
They provided a detailed update assuring everyone they're on track with the modernization program.
Good to hear.
And they confirmed they're on pace to meet all the regulatory requirements.
So far, so good.
They did mention that the program might cost a bit more than they initially thought,
How much more are we talking?
an extra $15 to $20 million.
Not ideal, but not a huge amount considering the scale of the project.
Right, it's understandable. Complex projects like this can have unexpected costs.
It's like renovating your kitchen. You might find some hidden plumbing issues.
Exactly, things happen.
So when will this modernization program be completed?
Sotera said most of the major spending should be done by 2025.
So investors have a clearer picture of the financial impact in the coming years.
Transparency is key.
Now, about those knee shaft regulations.
The ones we talked about earlier.
Yeah, what's the latest on those?
Sotera confirmed they're pretty much set in stone.
So no going back.
But they did mention some ongoing discussions between the industry and the EPA about clarifying certain aspects of the rules.
So there might be some minor tweaks.
Possibly, but the overall framework is in place.
Got it. And what about the safety concerns around ethylene oxide emissions?
So Sotera emphasized their belief that their facilities are operating safely and in compliance with all regulations.
So they're standing their ground.
They maintain that the emission levels from their facilities aren't harmful, and they're committed to educating the public about it.
It's good that they're being proactive.
They even directed listeners to their website, where they have a whole section dedicated to ethylene oxide and frequently asked questions.
Transparency is important, especially with a sensitive topic like this.
Absolutely. They seem to be trying to address any concerns head on.
All right, let's switch gears again and talk cobalt-60 capacity, particularly in light of that Darlington reactor.
That's a game changer.
Analysts were eager to know how much this new reactor will boost Sotera's production capacity.
Sotera confirmed it's a significant increase, but they're not looking to flood the market with cobalt-60.
They want to match overall market demand and ensure a steady supply for themselves and their customers.
Smart move. You don't want to create a glut.
It's all about balance.
They emphasize this new capacity will help them meet the growing demand for gamma sterilization, especially for medical devices and pharmaceuticals.
Which makes sense. That market's only going to get bigger.
And it's not just about increasing production, it's about strategically managing their supply sources.
They currently source cobalt-60 from several countries, including Canada, China, Argentina, even Russia.
Talk about a diverse portfolio.
It's all part of their long-term strategy to ensure a reliable and stable supply of this critical material.
They're not putting all their eggs in one basket.
Exactly. They've got to be prepared for anything.
They also highlighted their strong partnership with OPG, the operator of the Darlington reactor in Canada.
Sounds like a solid partnership.
It seems like they're doing everything they can to secure their future supply of cobalt-60.
Which is crucial for their gamma sterilization business.
Absolutely. It's the foundation of their growth strategy.
Now, before we move on, let's touch on free cash flow.
The lifeblood of any business.
Sotera Health reported free cash flow of $74 million for the quarter.
That's a big jump from $18 million in the same period last year.
Free cash flow is basically the cash a company has left over after paying for its operating expenses and capital expenditures.
It's the money they can use to pay dividends, buy back stock, or reinvest in the business.
So a higher free cash flow is a good thing.
Definitely a good sign.
They attributed this improvement to strong earnings growth, lower interest expenses thanks to debt reduction, and favorable changes in working capital.
They're managing their cash efficiently.
It's like having a healthy savings account.
Exactly. It gives them options.
And speaking of returning value to shareholders, Sotera Health also announced they repurchased $40 million worth of their stock during the quarter.
Stock buybacks are a way for companies to return cash to shareholders.
And it can signal confidence in their future prospects.
When a company buys back its own shares, it reduces the number of outstanding shares,
which can boost earnings per share and potentially increase the stock price.
It's like making each slice of the pie bigger.
So with a strong balance sheet, improving free cash flow, and a commitment to returning value to shareholders.
Sotera Health seems to be ticking all the boxes.
All right, we've covered a lot in this part of our deep dive.
We have. It's been a whirlwind.
Any other key points that stand out to you?
I think what's really striking is how Sotera Health is executing this multi-pronged growth strategy.
They're doing a lot of things right.
Investing in capacity expansion, strengthening their supply chain, navigating those tricky regulations, and delivering solid financial results.
They're firing on all cylinders.
They're thinking long-term, positioning themselves as leaders in this really important part of the healthcare industry.
And I'm really intrigued by their upcoming Investor Day.
Me too. Should be fascinating.
I'm eager to hear more about their long-term vision and how they plan to leverage their strengths and address those challenges and opportunities ahead. Well, listeners, we've really dug deep into Sotera Health's Q3 2024 earnings call.
Yeah, we've covered a lot of ground.
They're a company on the move, that's for sure, tackling challenges head on, seizing those opportunities.
Definitely, they're not standing still.
And speaking of moving and adapting, that upcoming Investor Day on November 20th, I'm really looking forward to that.
Oh yeah, me too.
I'm eager to hear more about their long-term plans and maybe even get a chance to chat with some of their leadership team.
Yeah, it would be great to get their perspective firsthand.
I'm especially interested in hearing how they plan to balance their commitment to environmental responsibility with their business goals.
That's a key issue these days.
They did touch on their corporate responsibility journey during the call.
Right. They highlighted their focus on sustainability and community engagement.
It's like they're saying, hey, we're not just about profits, we care about the planet and people too.
It's not just talk, they're actually walking the walk.
Which is important. Companies can't just pay lip service to these things anymore.
It's got to be part of their DNA.
Absolutely. Now, before we wrap up, let's give our listeners a final takeaway, something to ponder as they follow Sotera Health's journey.
Okay, here's a question to chew on. How will Sotera Health differentiate itself in this increasingly competitive market?
That's a good one.
We're seeing more and more players entering the sterilization and lab testing space.
Right, it's getting crowded.
So Sotera's going to have to find ways to stand out, maintain that leadership position.
So like a race. Everyone's trying to get ahead.
Exactly. And Sotera's got a strong track record, a lot of momentum, but they can't afford to rest on their laurels.
They've got to keep innovating, finding new ways to add value for their customers.
It's all about staying one step ahead.
Our time for the grand finale, our This Is Not Financial Advice segment.
The moment we've all been waiting for.
Remember, this is purely hypothetical, just for fun.
We're just spitballing here.
So, based on everything we've learned about Sotera Health, what's a crazy, but maybe not so crazy, trade idea we could cook up?
Okay, how about this? Sotera's all in on gamma radiation sterilization, right?
Right.
And with their cobalt-60 production ramping up big time, they could become the dominant force in that market.
Yeah, it's a real possibility.
So what if we buy a ton of call options on Sotera, but way out in the future, like 2030?
Whoa, that's a long-term play.
We're betting that Sotera will be a market leader by then, and their stock price will reflect that.
We're talking about capitalizing on the gamma radiation boom.
Exactly, but now for a totally different flavor.
I like where this is going.
Remember how Sotera's dealing with those ethylene oxide regulations?
Yeah, that's a bit of a wild card.
What if we play both sides? We buy puts on a company that's heavily reliant on ethylene oxide sterilization, betting they'll struggle to adapt to the new regs.
Okay, I see where you're going with this.
And at the same time, we buy calls on Sotera, betting they'll navigate those regulations smoothly and grab market share from their struggling competitors.
So we're hedging our bets, playing the regulatory uncertainty to our advantage.
Exactly. A little bit of risk, a little bit of reward.
But remember, listeners, this is purely speculative. Don't try this at home without doing your own research and talking to a financial professional.
Absolutely. This is just us having some fun with the information we've gathered.
And with that, we wrap up our deep dive into Sotera Health's Q3 2024 earnings call. Thanks for joining us on Talk Tickers.
Always a pleasure.
Until next time, happy investing.